This content is for educational purposes only, not a professional advice. What is credit? Credit. We use it every day, often without even thinking about it. Whether it's promising to complete a task, borrowing money, or hiring someone to do a job, it all revolves around trust. Trust that promises will be kept. Credit isn't just about numbers or financial transactions. It's about the confidence others have in your ability to fulfill your promises. Think about it. When you rent a place, you promise to pay. When you're hired, you're trusted to do the work. And when you borrow money, you're expected to return it. At its core, credit is about reliability, how you've acted in the past, and how likely you are to do what you say in the future. So how do you build and maintain good credit, not just financially, but in all areas of life? First, only commit to what you know you can deliver. Overpromising can damage trust. Second, track your commitments. Make sure you're organized and clear about the promises you've made. Third, always deliver on your promises. Actions speak louder than word. And lastly, be mindful of the commitments others make to you. Evaluate their reliability before placing trust in them. Credit, in any form, is built on trust. By managing your promises well, you not only maintain good credit, but also build lasting, trustworthy relationships. So now that you understand what credit is, let's talk about how it is measured. Chapter 2. What is a credit score? Credit is whatever makes others believe in your promises. Since it is so central to making and accepting promises, how do we assess it? Simply put, assessing credit comes down to two things. The past, how did the party that we are dealing with do on their past promises? The future, are they capable of keeping the new promise that they are making? Well, looking at the past to assess somebody's ability to keep promises is exactly what credit scoring is. In most cases, we use our judgment to do this assessment. Do I know him enough? What do others say about her? But our judgment can be biased, misinformed, or even illegal to use because 1. We often deal with people we don't personally know and will never meet. 2. Many financial transactions that involve promises, like making a loan or renting a place, are regulated and cannot be conducted on the basis of personal judgment. Therein comes the credit score, which essentially is a grade assigned by independent accredited institutions to reflect how well an individual has handled his or her past financial obligations. In the US, one popular credit score is the FICO score. It ranges between 300 and 850. A high score above 660 means good credit. So, do you know what your credit score is? If you don't know what your credit score is and are eager to find out, our next video can help you. Chapter 3. How can I find out my credit score? If you live in the US and are over the age of 18, chances are that you have a credit score. You can find out what your credit score is in multiple ways, and its value may slightly vary depending on who you get it from, what data was used to compute it, and what it will be used for. But if the information in your credit report is accurate, these differences are often minor, and usually one source is enough to give you a fair idea of where you stand in the credit spectrum. For starters, you can search for and use the services of one of the credit monitoring companies. They provide access to your credit score and ongoing monitoring for free or at a low monthly fee. The score provided by these monitoring companies is often educational and may slightly differ from the one that a lender would see if you apply for a loan. Next, you can get your score directly from a credit scoring company like FICO or from one of the big 3 credit reporting agencies, Experian, Equifax, or TransUnion. This is how lenders get your credit score, so the score you get here will match more closely with what a lender would see if you apply for a loan. Lastly, if you already have a loan, a credit card, or a bank account, you can look into your statement or your online account information to find out if your score is listed there. So go ahead, find out what your credit score is today. Now, it may be the case that you actually don't have a credit score at all, and there could be several reasons why. Let's find out together. Chapter 4. Why don't I have a credit score? When you check your credit score, you provide personal identification information such as your name, address, social security number, and date of birth. This information is used to find your credit bureau record at one of the 3 main credit bureau companies. If all goes well, your record is found and used to calculate your credit score, which then is communicated to you. But there are cases when your record cannot be found because either it does not exist or you provided wrong or outdated personal identification information. You should particularly double-check the social security number and date of birth, but also try an older address if you don't get a score with your current address. If it is confirmed that you do not have a credit bureau record, then you have never dealt with a bank or a company that reports to the bureau. This makes you credit invisible. People who are credit invisible usually get automatically denied when applying for financing unless they accept to pay extremely high financial charges, put down security deposits, or get a guarantor. There are also cases when you don't get a credit score because your credit bureau record does not have enough recent credit activity in it. In this case, you are credit non-scorable, and again will likely face difficulties when applying for financing. So if you are currently credit invisible or credit non-scorable, it's time to get going and find out how you can build and maintain good credit. If you don't have a credit score, you need to build one. Credit scores are critical to many aspects of your financial life, and not having one will likely not play to your advantage. Chapter 5. How to build credit. Building credit comes down to creating a track record of your ability to keep your financial commitments at the credit bureaus. You can usually do this by getting a credit card from a well-established bank that reports to the credit bureaus. Credit cards are a great way to start because they give you the flexibility to control how much you borrow, and when you borrow, while also allowing you to repay at your own pace. If you are new to credit, however, you might have to either put up a security deposit, apply with a guarantor, or accept to pay high interest charges on unpaid balances. These constraints might sometimes get relaxed if you apply through an affinity program with your school, company, or other affiliations. Even if you don't have the need to borrow, you can use the credit card for some of your daily spending and always pay off the balance at the due date. This enables you to build a good credit record without incurring any finance charges. Some other common ways of building credit are either financing or leasing your car or reporting your rent to the credit bureaus. Once your record is created at the credit bureaus, it will usually take 3 to 6 months to get your first credit score. The credit score you will get will depend mostly on how you are keeping your payments, so make sure you make your payments on time. Let's now further dive into how your credit score can affect your life. It's important to know this if you want to avoid getting into some difficult situation that you could have otherwise prevented by maintaining a good score. Chapter 6. What impact can a bad credit score have? Once you get a credit score, it's important to check it from time to time to make sure it does not get too low. A low credit score can affect your financial life in many ways. First of all, you will likely have difficulties securing contracts that require long-term commitments, such as loans, car financing, rent, or even in some U.S. states, certain types of jobs. This is because individuals with low credit scores usually have many missed commitments that have been recorded in their credit report and make people think twice before entering a new contract with them. Furthermore, even if they end up securing a loan or a rent, it may come at a much higher cost than what they would have paid if their credit score was higher. In the case of a loan, for instance, borrowers with a low credit score may be asked to pay interest charges that are twice as high as those paid by borrowers with a good credit score. Similarly, when financing a car, those with a low credit score may get asked to make a higher down payment and also accept a higher monthly payment in order to secure the deal. Lastly, if they are looking to rent a place, landlords may deny them if there are many other applicants, Ask them to put down a higher deposit amount or require a guarantor. These are just a few examples of why it is important to avoid letting your credit score get low. So now that you know why it's important to take care of your credit score, let's go through what you can do to avoid deteriorating your score. Chapter 7. How can I maintain good credit? There are a few things you need to do consistently to maintain good credit. First, you have to stay credit active by having at least one open credit card. Even if you don't like debt, you can use the credit card as a debit card and pay it off every month to avoid interest charges and build good credit. Second, you must demonstrate that you can handle debt well by making your payments on time. If you owe some debt, chances are that you will be required to make a payment at least every month. Be aware of those payments, plan for them, and try not to miss them. Any missed payment will be recorded on your credit bureau record and cause your score to drop. Moreover, missing multiple payments in a row will significantly damage your score. If you are struggling financially and still owe some debt, reach out to your lender and ask for a workout solution. If you stop repaying your debt, your lender will likely start collection efforts and eventually take you to court. All this will be recorded on your credit report and further damage your score. Finally, since the best cure is prevention, try to moderate your credit usage. Excessive usage of credit will hurt your score. Every attempt to get a loan is recorded on your credit report as an inquiry. So applying too often for a loan will cause your score to drop. Similarly, constantly maxing out your credit card limit is also a sign of excess use of debt. So avoid maxing out on your credit card and pay down high balances as quickly as you can. The last thing to talk about before ending this series of credit tutorial is how to deal with errors on your credit bureau. Yes, unfortunately, your credit bureau report can sometimes contain errors that might affect your score negatively if you don't take steps to correct them. Chapter 8. Why is my credit bureau information inaccurate, and how can I correct it? Your credit score reflects the information that is contained in your credit bureau file. It might get affected negatively if that information is wrong, so it's important to review your entire credit bureau report from time to time, or even subscribe to some monitoring services offered by banks or other providers that will alert you immediately if something significant changes in your file. Inaccurate information can be added to your credit bureau file for many reasons. Your personal information, such as name or address, might not have been captured well or might not be up to date. This can cause difficulties verifying your identity or tracking your credit activity properly. Your file can also sometimes contain information that was wrongfully assigned to you by the credit bureaus, either by pure mistake or because of some current or previous association with the actual owner of the information, such as your spouse. Lastly, if you are a victim of an identity theft, you should very closely monitor the information on your file, because the perpetrator may at any time open financial accounts in your name that will be automatically reported on your file. You can usually correct any wrong information on your file by opening a dispute online with the credit bureau company that collected the information. Depending on the case, you will be asked to provide some proof that the information was incorrect, and also reach out to the third party that reported it to ask for some correction. For more tutorials like this, follow us on social media platforms or subscribe to our YouTube channel.